So, welcome back. We are going to look at the commodities market and we'll start by looking at the US dollar. And just to say, this market was all over the place, and most commodities indexes and indices and commodities were basically all over the place today. It started to look very promising with the trade in the DAX, and I was also thinking about doing trades in the other US indices, but I did not want to run into the same problem as Monday, so I basically didn't make those trades. DAX did look very promising. It went into profit very early and then had a major pullback, but I think that it is just a matter of time before those indices absolutely collapse. If you look at my technical analysis for the US indices, they are all fairly overbought at this point, and I think it's just on probably tomorrow or maybe on Thursday that we'll have a major pullback of probably 2-3%, but that is to be seen. But we will look at the US dollar index first. We ran into support here, and this is going to be interesting because if this breaks and we break these lows, then we are going to see an absolute tidal wave in the US dollar index. We'll basically collapse towards these very lows here, and that will have a major effect on commodities, precious metals, stocks, and so on. But we had a pullback, and that is a good sign that we are basically going to go higher. And that means also that that would make sense that indices and stocks will start to decrease if this goes higher. To the fact that basically becomes more expensive to buy commodities and so on if the US dollar appreciates. So a rally towards the 50-moving average will see gold decline. It will see oil decline. It will also see indices and stocks also decline. So keep that in mind, that what basically happens here. If you look at the hourly chart here, we can see that we are rallying up towards the 50. The problem here is that we have not breached the 50. And even though we breached the 50, we have the 200 moving average, which will be even more difficult. But the technical indicators here are fairly bullish. And also on the 4-hour chart, they are also looking fairly bullish. So we may rally up towards this 50 moving average. If that breaks, we'll go all the way toward the 200, and then you end up with 93. And there's where you basically breach the 50 moving average here. So if you look at oil, this market was basically all over the place again. This is a fairly bullish candle. I did expect us to fall towards the 50 moving average. The technical indicators here are all looking very flat. So it's very difficult to say where we go. If we break the top here, then we are going to test these very highs and probably go to 45. I don't expect that to happen because there's just not the demand for it at this point. But a break towards the 50 and break the 50 will go to the 200 moving average, which will be significant support. If you look at the 4-hour chart, we can see that it is the 50 moving average which is acting as support. So we have not breached it. We have not done that since over here. So until we do, we are just going to trade sideways or slowly go back to these very highs of 33.2. So keep that in mind that we need to break below the 50 moving average in order to get a real signal that we are going to go lower. At this point, these indicators are not showing that. So natural gas. The trade that I had for natural gas just went completely out the window. At this point, it is not tradable. Trading this at this point is just pure gambling. We could fall all the way down towards 2.6. We can also fall down to 2.5. If you look at the Fibonacci retracement, it gives an indication of where technically we could go. We had the first one here, 2.66. Next one is here, 2.4. And the third one is here, 2.2. So we could actually fall all the way down to 2.2 before we find a significant support here. And that will also coincide with these highs here and this area here. So that is possible. It's still fairly impossible trade to do because it could turn around all of the sudden. The thing that you do here is that you wait until you see where there's major support, when you see these indicators also turning around, because there is a lot of move to the downside in this market. So, but however, if we break the 50 moving average and break the highs of this candlestick here, that is a bullish sign that we are going to go higher. So if you look at copper, so I entered a copper trade on Monday. I should have held that trade because that would be quite profitable, but that didn't really work out. But this is a very encouraging sign of the CCI. This is a possible trade to the downside. I think that we're going to see something similar to this. So if you look at this, the basically pyramid shape here, basically the top here is the top of this candlestick here. And when we had this pyramid shape, basically here, and also here, we all had major declines in this market. So we have a similar pyramid shape here, and therefore we could expect this market to gradually decline all the way down to the 50 moving average, which is around 3.078. And that is a fairly good short if anybody is interested in this. A break below above this candlestick here opens the door to much higher levels. So Pallion, I think I pronounced this right. This is also an impossible trade at this point. If we break below these low candlestick here, then that opens the door to these very lows, and that should be major support. If we break above the 50 moving average, then that opens the door to these very highs. So it is a matter of seeing where this market is going. At this moment, these technical indicators are not showing anything. So this is basically a wait. The same goes for the gold market. We're in the same position. This is an impossible trade to do. It's pure gambling. So a break above the 50 moving average and this resistance area, that is a possible buy. A break below toward this resistance area here, support area here, to the boards to 1800, that's also buy, and there you could basically enter the market. Otherwise, this is pure gambling. So if you look at silver, it's very same thing here. We can look at the Fibonacci retracements, which are fairly clear over this market. We can see that we ran into support here because this is the first Fibonacci retracement. If this breaks, we'll go towards the 50%, and that is basically the ultimate trade for silver. It's very similar to gold, but pay attention to the US dollar index. If that starts to appreciate, we'll see major declines in gold and silver, and that is basically the sign for this market. Otherwise, we need to break the 50, and there's a resistance area here in order to go to the very highs. So if you look at cocoa, which was probably the most surprising thing that happened today, we rallied significantly over the 50 moving average. At this point, we are running into resistance this area here, which is at 2.525. And if we rally further, then we'll go to the very highs. And if we turn around there, then there's a very good chance that you can short it all the way down to at least the 50 moving average and these previous lows at 2.2. And that is a fairly good trade. So if you look at sugar, so sugar did, well, this was kind of expected. We rallied above, but broke down because we are so overextended at this point. We're not overbought, but this should be a warning sign for everybody that's thinking about basically buying this, because the CCI is showing a massive basically that market is very overstretched. This was not a candlestick that was expected. It was basically expected the opposite side, and that would open the door for a very good buy position for sugar. But at this point, it is also very, very risky to enter this market here. It's more likely that we'll go down due to what basically this is indicating. But we still have the MACD and the stochastic that are fairly bullish at this point. So is to be seen. We'll find support here at the 0.14 and probably also here at 0.1439. And that will probably be the best area that you could get to buy this market, into this market. So if we look at wheat, then we are nearly ready to enter a buy position here. This was a very promising sign, but this was not. So at this point, if we pull back towards the 50 moving average and then try another rally, then we could go and test these highs of 612. If that breaks, then we'll go to the very highs of 636. Break below the 50 moving average opens the door to 200 moving average, and we have still this trend line here. There we are at the edge of this trend line, and it's holding at this point. We did pierce it the last two trading days and ran into toward the 50 moving average, but at this point the trend line is holding and these technical indicators are fairly bullish except the MACD. If you look at the 4-hour chart, we can see that we ran into resistance at the 200 moving and the 50 moving average and headed back towards this trend line. So these indicators are fairly bearish, so it is to be seen what basically happens tomorrow. If we break this 50 moving average, get a green candlestick here and starts growing to the upside, then we will basically go and target these highs. But at this moment, 50 moving average is major support at the 4-hour chart. So if you look at cotton, we need to go to the daily chart here. We can see that we rallied quite significantly yesterday, but did not break these highs. So this was basically what I expected. Pull back towards the 50, and at this point, it's fairly difficult to say where we're going. But if we look at the 4-hour chart, we can see that it is the 50 moving average which is acting as resistant. And now we're testing again the 200 moving average. So these two moving averages will cross. We will get a break to the upside or the downside. At this point, I do kind of favor the upside because we have been in this trend line for a very, very long time. But it's to be seen. These technical indicators need to turn around. They're probably a little bit better to see in the 1-hour chart. In the 1-hour chart, they are basically turning around. So it is expected for this market to go higher when we touch this 200 moving average, and that we will see whether or not we can rally above those previous highs. So hope you find this very helpful. The market is extremely unpredictable at this point. Yes, therefore I haven't made that many trades because I like to make trades where I know where the market basically is going. And when it's this uncertain, then it's not very... then it's very risky. So good luck and thank you very much.